Pending home sales just dropped to an all-time low. What does that mean for the housing market? And more importantly, what does it mean for home prices? Hey, everybody, you're watching Bull, Boom, Bear, Bust. Let's go ahead and get into it, Bulls and Bears, without any delay. Let's start right here. This is out of CNBC. Pending home sales dropped to a record low, even worse than the financial crisis. Wow, so what does this mean? Well, it means that we're at a standstill right now between buyers and sellers. Now, a lot of buyers are priced out of the market, and we've never seen unaffordability at these levels. Another all-time record for unaffordability. So we have two all-time records happening right now in the housing market. Pending home sales, all-time low, as the article stated, and record unaffordability. Now, if you've watched my videos over the past few years, since 2020, I've said that the housing market would not crash. And so far, we haven't seen it crash. In fact, if you look at the latest year-over-year numbers, we're still positive year-over-year. Now, this is according to Redfin. Now, some of the other charts and data collectors are different because some don't look at all the zip codes, others look at most zip codes. Some only look at certain cities or the 20 largest cities, such as the Case-Shiller Home Price Index. But let's jump over to Redfin and take a look at what's happening with home prices. And we look at a chart here that goes back to late 2018, early 2019. And we look to the right edge here, we see October numbers. And if we look back to October of the previous year, we see that we're up, but just slightly. Now, we're actually down from the peak. That's not what's being reported, though. Of course, they're just going to talk about the year-over-year numbers. But if you look at the peak, we're actually down, and that's not being very widely reported, and justifiably so, because prices typically peak in the summer, and we usually see the yearly fall and winter price declines as the market slows down and sellers wait for better weather for the most part. And in a previous report, we talked about how new home prices were down 18% year over year. And that's usually where it starts because home builders more or less set the trend for the housing market. But what kind of timeline are we looking at here? Well, there's a way to get an estimate on a timeline here. And I'm still seeing this at least another 6 months before we start seeing more noticeable price declines where everybody starts paying attention and noticing that, hey, the housing market is starting to drop, maybe even crash. And why do I say 6 months? I'm not just pulling that out of thin air. Again, if you look back the last 3 years, I've said there wouldn't be a crash. But now I'm saying in about 6 months, we're going to start seeing price declines that many people may label or call a crash. Now, people have different definitions of a crash. Home prices up year over year, obviously not a crash to most people. Home prices down 5 to 10% in 1 year, that could be considered a crash to some people, especially for industry insiders that would panic when they start seeing prices go down. And for people that are using their homes as a lifeline, as an ATM, because they always want to refinance. And what people used to do was pull cash out of their home when home prices were going up, very quickly. But now things are changing, and here's why I say 6 months. Let's go ahead and go over to a chart here. And there's two key charts here that are important that we're going to look at today. The first one is inventory. And inventory paints a picture right here. If we look at the chart, we're no longer at all-time lows. We hit all-time lows in early 2022 at about 350,000 homes for sale. If you look at the most recent numbers, we're now above 700, just above 754,000. Now, why is that important? Because if you look ever since 2020, actually go back all the way to 2016, it's been a steady downtrend with the seasonal ups and downs, but overall it's a downtrend. And then especially since 2020 with the huge drop in inventory, all-time low there in early 2022. So we're no longer on the downtrend, we're actually on the uptrend. And why do I say that? Because just over 754,000 as of November, we already have the November numbers, compared to November of last year, it was 749,000, just under 750,000. So this is up year over year. Inventory is actually up year over year, and that is definitely a drastic change or difference from going back to the past 6 or 7 years here on this chart. An obvious trend reversal is happening in the housing market. Now, some people are saying, well, it's taken a long time. They raised interest rates over a year ago. What about a year ago now? We saw 6% plus interest rates, but that's not that long. Let's look back at the last time the Fed raised rates, and this was during the housing bubble. The last time before, not counting 2019. 2019 was a very brief period of a rate hike. So let's go back to the housing bubble era here and see what happened and look at the timeline on the rate increases back then. And this is a chart of the 30-year fixed mortgage rates. And we need to go back to the housing bubble. This goes back to 2000. And we look and we see before the housing bubble went bust, late 2008, mortgage rates hit a low of about 5.25%. If we look down here, where it bottomed out, right? And then we got above 6% there at about, let's see, when was that here? Starting in 2006. So when you look at the total time from the lows to above 6%, approaching almost 7% at one point, but above 6%, we had to stay there for nearly 2 years before the housing market started correcting. And if you look at the recent increase, yes, the increase in mortgage rates has been a lot larger, a lot bigger, spiking all the way up to 8%, but it's been only about a year since we went above 6%. Right? So it's something to keep in mind. We're actually closer to about 14 months. So this major price correction that I see in the housing market coming would, again, fall in the next 6 months if I had to put a timeline on it. Right, now let me put some contingencies, if you will, on my prediction. This prediction is counting if mortgage rates stay 6% or higher, right? So this doesn't count if there's emergency rate cuts, if there's rescue programs where they put in widespread foreclosure moratoriums, for example, and eviction moratoriums, because even eviction moratoriums, when it comes to the rental market, that affects home prices. And I've talked about that here a few times. So I think most of you know how that works here. When rents are high, people are going to be more encouraged to overpay or pay top price for a home because there's no cheaper alternative, basically. Right. So we have to look at all these things. And I really hope we do start seeing some price sanity enter into the market. But here's an interesting statistic that I found here in a recent news article. And this is out of Inman. 35% of Americans hope the housing market will crash in 2024. Why only 35%? Well, that's roughly the number of people that are renting. And to prove that, let's go over here to the home ownership rate. And we look to the right edge here. We see the home ownership rate right at about 66%, meaning roughly 2/3 of the people own their home or have a mortgage, versus 34% that actually rent. So this is right along with the number there, 35% of Americans hoping that the housing market crashes. Of course, if you're renting and you want to buy, you want prices to come down. If you own a home, you likely don't want to see the value of your home go down unless you want to get lower property taxes. Then some people may want to get lower prices, or if you're just not considering selling. I own real estate. I don't have any plans on selling. Otherwise, I might hope that prices don't go down. What I'm concerned and worried about a little bit, though, is the young people in my family. I have kids. I'm worried about their future, and will they ever be able to afford housing in their entire lives, or are they going to be renters for their entire life? So that's the thing I think about when I look at prices, and I want prices to come down. I want the cost of living to come down. I don't want people to have to struggle. I don't want my kids to have to struggle. I don't want your kids to have to struggle if you have kids. I don't want people to struggle in general. I want everyone to be happy. I want this world to be happy. So the more in debt people are, the more depression you have, the more angry outbursts people have, because financial stress is one of the leading causes of not just stress in general, but relationship problems, emotional problems. When people are in a financial stressful situation, that really affects your overall life. So I wish things would get back to some sort of normalcy. But then again, what is normal? Who has the actual definition for what's normal or not? Now, also real quick, back to the 35% or so people that want the housing market to crash. Maybe you do own real estate and you want the housing market to crash because you're looking for investment properties. Maybe you want to buy a property for a family member or what have you. And so then if you look at it as an investment, then you want prices to crash as well, because buy low is the way to go, right? So if you're looking to invest in something, you want to buy low, you don't want to buy high. So even people that own homes may be looking for a price correction for investment opportunities. All right, everybody. So what do you think about this? What do you think about the charts? My timeline, back to the beginning here, we're at a pending home sales dropped to a record low, but we're starting to see inventory increase. Interest rates have been over 6% for over a year now. So we're headed into the first half of 2024 is going to be my timeline. Again, without emergency rate cuts or other sort of other large interventions, into the markets. You know what I mean? What do you think about all this? Please let me know down in the comments. Thanks everybody for being here. As always, keep stacking. Bulls and Bears. We'll talk to you very soon. Bye for now.